Welcome to the Biz Show, sponsored by InvestQuire. And now, your host, Barry and Lisa.
Hi, everybody. Welcome to the Biz Show. How's everybody doing today? Unfortunately, today, this is going to be another solo podcast. Lisa, unfortunately, is traveling and she's been stuck with flight delays coming back across the United States here. So it's just me today. She'll be back here next week for sure. Anyway, so this week on the Biz Show, we're going to talk about a very critical topic. And we're going to talk about how and why would somebody sell a distressed or a failing business. This is a interesting dynamic. Every once in a while, we come across it. And we thought it would be good to talk about it this week and kind of discuss some of the things that happen during that process. And specifically, why, firstly, why would you want to sell a distressed business? The second is how and what are the methods of selling that type of business? And then third, who is going to be the people that would want to buy a distressed business? So with that, let's jump right in. We're going to talk and provide some insights, some tips, and kind of just clue you guys into what happens. So the first thing, let's talk about why you would want to sell a distressed business, right? And selling a distressed reason, you could be many different reasons. A lot of it could be financial, right? And the business owner is looking to exit the company and trying to minimize his financial losses, especially when the business is facing significant challenges as declining revenue, high debt, or operational inefficiencies. Another is selling it to prevent the business from going bankrupt, which can have long-term consequences for the owner's financial and personal reputation, especially if the business is a sole proprietor or a partnership. That bankruptcy is going to be personally on that owner. So definitely some things to think about, right? If you're an LLC or a corporation, well, then, there's different separations and stuff like that. The business is an entity on itself. But, we wanted to stress the fact that just because your business is failing doesn't mean that you can walk away from it and close the doors. I mean, you can if you absolutely want to, but it's still a viable company to sell. There's assets, there's perhaps employees, perhaps there's intellectual property. There's all kinds of different things that can really take and become part of an asset for you to sell that company. So with that said, those are the main reasons why people would want to sell a distressed business. And that's what we're going to call it, right? We're going to call it a distressed business more so than a failing business. So what are the methods of selling a type of business like this? Which, some of them are basically the same, right? Get yourself a business broker and have them start working on getting it sold. But there are various different models and strategies for selling a distressed business. And, it depends on a lot of things, right? The assets, the liabilities, the industry that you're in, what the market conditions look like. There's the two biggest common methods of selling a business is asset sales and stock sales. And those are distinctly different, right? For instance, asset sales, you might be selling off a certain division of the business or certain products of the division or certain assets, equipment or whatever the case might be. Where stock sales, you're going to sell the entire company. And there's some strategies, right, involved in seeking out strategic buyers. There are people out there who are interested in buying businesses, for whatever the case might be. Some of them are looking just to buy business debt, right? They want to offset their taxes or other items with the debt. And, but you should always engage a business broker, especially if you're doing a distressed business, because there's a lot of things that go into the sale. And then they can facilitate that sale and conduct a thorough due diligence to make sure that everything is accurate, so that when the package is presented to the potential buyers, everything is all the T's are crossed and the I's are dotted. Besides business brokers, there are other people. There's management, and we'll talk about that one in a second. There's turnaround specialists, there's entrepreneurs, there's competition. There's a lot of people out there who might want to buy your business. Let's talk about who might be interested in buying your business. There are several types, right? Again, as I mentioned, turnaround specialists, business brokers, distressed asset investors. Those could be private equity, strategic buyers, competitors, and financial advisors. And I want to drill down on each one of those just so that we understand that. So first of all, let's talk about turnaround specialists and distressed asset investors. What is a turnaround specialist? Those are people, individuals, firms specializing in revitalizing struggling businesses. Turnaround specialists often acquire distressed businesses with the intention of implementing strategic changes, restructuring operations, and work, hopefully driving new profitability within that company. It's a challenge for them, right? They're looking for a business that is failing. They know that they can probably get it on the cheap, and then they want to take and turn that into a viable business again. The other are distressed asset investors, right? And again, those are investors specifically looking for distressed assets, businesses that are facing financial difficulties, operational hurdles, or market challenges. Distressed asset investors seek to acquire businesses at a discounted price, and then they can leverage their expertise to turn that business around and turn it back into a viable company. So that's the first group of people that you're looking at. The second group are strategic buyers and competitors. And strategic buyers, what are those, right? Strategic buyers are companies or investors who see strategic value in acquiring your distressed business. They may be your competitors looking to expand their market, diversify offerings, or access new clientele, or get into a geographical market that they're not currently in. Now, let me stress this. Strategic buyers typically pay a premium for distressed businesses. So just because your business is failing, it's not making any money, doesn't mean that it's not necessarily worth XYZ dollars, right? And when it comes to strategic buyers, those are always the ones that we look for first, because they're going to pay top dollar to get that business, because they want to get into the geographical market. They want to expand their market, or they want to provide some services that your distressed company provides, but instead of building it from scratch, they're just going to take over what you got, and then they're going to build and modify and enhance those services. So those are strategic buyers. And then there's industry consolidators. And those are companies that are experienced in consolidating companies, right? They look at trends. They actively seek acquisition opportunities, including distressed businesses. These consolidators, they want to strengthen their market position, right? Maybe economies of scale, maybe capitalize industry shifts or disruptions. So again, similar to strategic buyers, they are looking at, here's the market. The market is shifting. We don't have this segment in our line of business, but this company does, and this company is not doing well. So maybe we should buy that company. And then we can add those services to our lines of business. Okay, other types of buyers are financial investors and private equity firms. And let's talk about private equity firms first, right? Private equity firms, they a lot of times have expertise in distressed investments, and they have teams that they've actually strategized putting together that focus on turning around companies and they have turnaround strategies, operational improvements, and financial restructuring experience. So, again, the private equity firm, they might want to buy the company at a discounted rate, and then they're going to inject some capital into it, provide some guidance, and then implement management changes and hopefully enhance that business for performance and value. Financial investors, right? Apart from equity firms, financial investors, including high net worth individuals, investment funds, they're interested in distressed opportunities too. These investors seek to attract risk adjusted returns by acquiring distressed assets at discounted prices. Again, the key word that you probably heard throughout this entire podcast is distress and discount, right? Those two, they both start with D's, and they kind of go hand in hand. So, people see that and they look at it. It's like, when you're shopping, right? Everyone's looking for the best type of a product at the cheapest price they can get. The next type is entrepreneurs and a management buyout. We're going to talk about entrepreneurs first, and then we're going to kind of drill down on what a management buyout is, or MBOs. So entrepreneurs, right? Those are entrepreneurs that are just coming into the market. They, instead of wanting to start a business from scratch, perhaps they can buy your business and restructure it. Perhaps they have new ideas or some expertise that they might be able to add and change and turn that business around, right? So this is an opportunity for them to get into the market at a low entry cost. They're going to do everything they can to try to capitalize and revitalize the business and pursue, growth strategies in order to turn that thing around. Again, entry to market, jumping in real quick and getting going. Actually, we have a customer that we're working with right now who is looking to buy a business. And it's a new business. They're a first-time business owner, or will be a first-time business owner. So they're looking for something on the lower side that they can get and dive into. So the second one is management buyout, MBOs, right? And what is that? That's typically taking the existing management team of the company, employees that are already in place at that business, and they orchestrate a management buyout. This involves a management team acquiring ownership and taking a significant stake in the business. Sometimes they're going to have external financial backing. Sometimes it's going to be some type of an equity play. Sometimes they're going to take and maybe pay the current business owner a monthly fee until XYZ dollars are paid off. So there's a lot of opportunity there. And perhaps the employees of the company, who knows the company better, who knows the product better, and who knows the customers better than the current employees and staff that are already there at the company. So I have seen management buyouts happen on a regular basis where they'll do that. I mean, it makes sense. And, it also saves jobs, right? Because then all the employees that are within the company, instead of you shutting that business down, they buy the company and then they get to keep their jobs. And now they have a ownership stake in the company. So perhaps not just make a salary, but also they might have some dividends or profit sharing within the company as that company is being turned around and progresses. Although there's also the flip side of that. If you're a stakeholder in the company, you might end up having to put a little bit extra money in or take less pay because the company needs an injection of financial or an injection of money to get over a certain hurdle. But that is a viable option. And then as well, then the last group of people typically are specialized buyers and asset acquirers. What's an asset acquirer, right? We're going to talk about that. But first, let's talk about specialized buyers. Who are they? They are typically companies that want to acquire technology and IP. So if your company has a certain technology that's proprietary or has patents or copyrights, they might want to buy your company just for that. And this kind of goes twofold, and that's why I kind of group these two together, because asset acquirers typically just want to buy one particular asset within the company. Maybe that's that intellectual property or copyright. But anyways, first of all, let's talk about, the specialized buyers, right? So they want to acquire that business for the intellectual property, patents, copyrights, technologies, proprietary data, or possibly a particular customer base that they really want to dive into. They're basically looking to leverage the acquired assets for their own innovation, product development, or enhance their competitive edge. Also, along with that, kind of a separate group are real estate investors. So if your company does have real estate, then that is also going to, even though in your company's distress, there's some value there, right? And so that's going to attract real estate investors because they see there's valuable real estate. They want to, and they're going to express their interest in acquiring the business. They might not really want the business at all. They might just want the property of the business, which is, here nor there. But that's definitely another opportunity to explore when selling a distressed business. What might they do with it? Who knows? They might redevelop it. They might repurpose it. They might level out and build who knows, well, probably not a shopping mall nowadays, but probably condos or an office building, whatever the case might be. Even office buildings, really, we see a lot of office real estate now that's empty because people are, not wanting to come back to the office, so on and so forth. So there's a lot of office empty space. So a lot of companies are downsizing their corporate offices to smaller locations if they don't own the building, or they're leasing out some of their office space to new fledgling startups so that they can have opportunities to have some office space, maybe at a discounted rate. And then that corporation gets to recoup some of their monies for the real estate. And then the last one is, and this is the last case scenario that I would suggest for anybody is, asset liquidators and auction buyers, right? And that's what I was talking about earlier. These are the people that they're going to dissect your business, and they're going to sell off either divisions, equipment, different items within the company might get, purchased or auctioned off, whatever the case might be. And with that, they're going to that's how they make their money. That's what they do for a living. That's how they make the money. Unfortunately for you and your company, there's two ways those are bought off. You're going to get a portion of whatever they get out of it, which is, I wouldn't suggest that. I would suggest sell it to them for XYZ dollars. You got to find or an exact dollar amount that you guys agreed upon. They're buying it that way. When they go to auction, if they don't get the dollar amounts that they want, then you're not taking any less money than what you're expecting to get. Anyways, today's kind of a abbreviated podcast. There's not a lot of banter going on today between Lisa and myself, but and I kind of blew through these things, but please feel free to reach out to us anytime. Remember that selling distressed businesses is a complex endeavor, right? And you need to have somebody that really understands the market dynamics when you're selling that type of business. So that's where we InvestQuire can definitely help you and want to help you. So make sure that, if you need to, reach out to us at, investquire.com. You can find Lisa and myself there. Also, we have a Facebook group page for the Biz Show, and you can find Lisa and myself there at the Biz Show, and we're always looking forward to talking to people there. And if you've got ideas or concerns, let us know. You can put them in there, and we definitely will respond to you. Okay, guys, well, that wraps it up for this episode of the Biz Show. Hope you guys had a great day, and let's go out there this next week and make it a good one. All right, talk to you later. Bye.